Good morning, traders. This is Alice Lind. I would like to ask you to put pluses if you can hear me and if the picture is clear. We have several pluses. Let's wait for another one. Okay, thank you for your attention. So today it's not a trading webinar. I see that a lot of people have joined us. Probably that's because today's topic is pretty essential and necessary for every trader. We are going to talk about the risk and the capital management, how to deal with that, how to handle that, and how to understand what is that and how it can help the trader, and as well how omitting these rules, these guidance can lead to not that pleasant consequences. So first of all, what is risk management? Risk management, it's basically understanding of what you are doing, realizing all risks, and understanding what you will do if your prediction in the current situation is not correct. So basically that's that essential part of the trading system that we were talking about before, and what is helping the trader to find himself in the stream in the market. So first of all, risk management tells you what, or capital management tells you what amount of money to open the trade, what percent of your investment you can risk in this or that market situation, what you should do in this or that case. So basically it gives you understanding of the further steps, further movement on in any market situation. Also the understanding and checking of the economic calendar may be referred to the risk management. When you take into account events that occur on the international financial market, on the political in the political industry, in international relations, if you take that all into account, that's also an essential part of your risk management, because you know that American dollar will drop due to this factor, or gold will rise due to another factors. That helps to understand the market movement, that helps to understand basically some jumps on the market. Without that, they can hardly be predicted, and market analysts as well as traders can be lost in the without understanding what's going on right now and what can be expected further. So before you start trading, before you open the trade, it doesn't matter long term or the short term, important essential part is to take attention to pay attention to the economic calendar, to see if there are going to happen some important events. Also spare some time for checking the important events on the international political agenda that may occur, that may influence the market, that may influence currencies, that may influence stocks. For example, right now we have the earning period of international giants, of the hugest companies that represented all around the world. So basically, their earning report influenced their stocks significantly. And if the currency is affected by many factors, the stocks, they basically affected only by the earnings report. So if it's positive, we can see that the stocks, the price for the stocks is growing. If they are negative, it's falling. So basically, it helps to make prediction, it helps to open the trades to make money. So that's important piece, that's important part of the risk or capital management. Because if you take into account everything what's going on in the market, everything what's going on in the world, or on the assets that you work with, you can be sure that you won't be taken by the surprise. So I hope it's clear with that. Economic calendar, economic news, that's important part of the risk management. Without knowing them, it's hard to understand what's going on, and it's hard to give explanation to some changes, significant changes in the market. I believe all traders can recall several events in the market when without there wasn't any technical the technical analysis, the technical approach couldn't tell what's going on currently. But if you would pay attention to the economic calendar, you would see that this event was caused by some factors in the world that can be easily explained. And when you are taking into account that factor, the drop or the growth of some asset can be easily explained. Also important part that I wanted to talk about is the risk management. Money management, taking into account the amount of money to invest. I'm always telling to my traders not to use more than 5% of their investment per trade. Sometimes it's okay to use 10, but no more. Because when you open one trade for 5%, you have 95% more to open the trades if the first one was out of money. But if you enter for the 20%, if you enter for 50%, it's much bigger amount. And if the first trade expires out of money, you don't have that much steps to cover that and to deal with that. And of course, such significant loss can cause additional psychological pressure and desire to repay, and after that some unwise steps can be taken. You can compare that to the card players, those people who like to play cards. When they are losing, they try to do something in order not to lose, in order to get back what they lost, and they are starting to make some not that smart moves, and that cause them to lose more. So realizing what you're doing, realizing what amount of money to invest in this or that case helps to handle with that, helps to understand that I only enter, let's say, for 5% per trade, no more. Even if the desire is stronger, I only enter up to like 10% of the investment per trade, but not more. so that you could understand where it could guide you. Those traders who martingale sometimes, well, probably you saw that from time to time on my trading webinars I'm using the same approach. Of course they cannot follow that, because on the fourth or fifth step sometimes you need to invest much more than 5%. But when they are starting with 1% of their investment, with 5% of their investment for the first step, they can easily handle that, because they have sufficient funds in order to implement that approach. The same is with those traders who come here to play. Well, basically any guidance about the risk capital management won't help them, because they don't have basically the goal to make money here. They have a goal to win or lose, not like earn. So some significant risk management, capital management approach won't work with that. So my advice for you is to understand what you're looking to find here, why you came here: to play, to risk, to gamble, or to make money. In this case, you need to create the financial system for you. If you cannot do that yourself, you can ask your account manager, your expert, to help you with that. Financial system basically allow you to understand how much profit your target is within some certain period of time. Usually it's made for 1 year. What will be your average profit per 1 month, per 1 day, how much you can withdraw in order not to spoil that plan, and so on and so on. Some traders want to withdraw each month, some traders want to withdraw twice a month, and so on. Somebody like me withdraw once in 3 months, once in a half year. So based on that, based on how much you want to withdraw, based on how much you want to make, this financial plan will help you to understand your further steps, and whether you should trade today, whether not, whether you should spare more time for trading, or you can have a rest because you already reached your purpose for the daily profit. All that significantly helps to understand your goals, and helps to understand what you want from this market, from your trading, and understand what needs to be improved. Because if you cannot follow that plan, if you don't make as much as you planned, probably something needs to be changed, and your trading approach needs to be revised. So that's important part of financial planning. Also, I wanted to talk about the time frames in when it deals to trading, when it deals to risk management. Short time frames up to 5 minutes, that's pretty risky. Let's be honest, that's really risky trading. And if you are trading within that limit, you need to realize all your risks, because within short period of time, the market is much like chaos, much chaotic. So to understand what direction it's gonna go, like within 1 minute or within 5 minutes. Of course, 5 minutes it's easier, but within 1 minute that's pretty difficult. Let's open the chart for euro, American dollar, and 1 minute time frame. So basically here you see that it's really hard to say where it's gonna go, up or down, because on 1 minute there is like no significant how would you say that, influence of the market. There isn't any rules basically. Of course, if there is some event on the market that influence it, of course it will go in one direction, but when in the flat situation or any other situation, it's pretty hard to tell where it's gonna go. So when you are trading on these short time frames, you need to be ready for the overlapping for the third, second, fourth, fifth step in order to guess the final direction, the final route. Basically, trading on the 1 minute is more like guessing. When it's deals for at least 30 minutes, it's much easier to make a really correct prediction about the further direction. 1 hour, 4 hour, even several weeks, it's much easier to predict than 1 minute. So I believe for these short time frames, only those traders are trading who wanted to get rich really fast. But on this market, I believe there is nothing to rush. There is nothing to chase or something. If you want to get the stable profit from this market, you need to respect it. You need to make good predictions about it, make good analysis, and open only the trades that confirm that analysis, that confirm that prediction. And in this case, I'm sure this market will allow you to make profit, to make money. And that's the reason why we all came here. So, about the risk management, let's make some kind of the conclusion. First of all, it's important to have system that tells you what to do. It's important to have knowledge that helps you to understand the market. It's important to check for the news, to know about the economical situation of the country, for the assets of which you are trading. Well, not all of us are trading for like both stocks, currencies, commodities, and indices. Some of us prefer to trade only on some certain currency. So pay attention to what's going on in that country, what's going on to the economy of that country, what's going on with the political life of that country. That's an essential part. Understand why you came here. To make money, to gamble, to have long-term relations with this market, or you came here only for, let's say, one night. So understand why you came here and how much you want to get. Create your financial plan that will allow you to know when you should trade, when you shouldn't trade, how much you can withdraw per month, per day, and so on. You need to have the system in this as well. Choose your assets. Every trader has the assets that he loves and the assets that he hates. So find those ones that are suitable for you. Sometimes those ones that we like, we trade bad on them. Sometimes those that we don't like, we trade good on them. So pay attention to your trades. Make an analysis of the trades that you have opened. Try to understand where were your mistakes and try to improve them. Try to improve yourself, your system every day. If it works perfectly, so there is no need to change. Okay, and probably that's the most important factors that I wanted to talk about. So if you want to add something more, I would gladly listen to your opinion, find out what are your ideas about that. And I also, as usual, I would like to invite you for the Thursday's trading webinar, where we gonna make some money, open some trades, analyze the market, and stay in the money. So I hope to see that you are present. I want to hear your feedback about this webinar and the next one. And so that's it for today. Bye bye.